You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back once again. It is Monday. It is 2 p.m. Central. It is 3 p.m. Eastern. Do you know what's going on in the world of crypto? Well, let's find out together, shall we? It is time once again for the Crypto Rundown. My name, of course, is Mark Longo from theoptionsinsider.com, as well as from the network that continues to grow. Listeners, 3 new shows hitting the network in the last, 6+ months. One of those coming just in the last couple of weeks. So it's been a hot time out there. Make sure wherever you're listening to the Crypto Rundown that you're getting the full network. So the full Options Insider Radio Network, that will get you over a dozen shows these days. So a lot to keep you informed and engaged in the world of options. And of course, if you're ready to make that leap, you want to get pro Q&As, you want to get oddities, you want to get maybe potentially a fantasy football league. I see that's getting floated. All kinds of fun going on. Only one place to get access to all that: win giveaways, prizes, exclusive stuff, live streams. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us this week in the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listeners. And next up in the Crypto Hot Seat, a first-timer on the Crypto Rundown, even though he has joined us on the European Market Brief just last month. So fresh off talking European derivatives, he's back to talk some crypto. He is Shawn Creighton, the Director of Index Derivative Solutions over there at FTSE Russell. Shawn, welcome to the Crypto Rundown.
Mark, thanks for having me. Really excited to join you today.
What's with FTSE and guys named Shawn running their derivatives side? It seems like that's the only people they hire.
It's I guess it's a requirement.
It must be.
You gotta be. Yeah, it's in the job description.
My producer told me she'd have said Sean's coming on out from FTSE. I was like, Sean's back? I didn't realize that there's so many Sean's. There's so many Sean's rotating through that she threw me for a loop. Of course, your predecessor spent a lot of time on our This Week in Futures option show with us. Many years. We had quite a few tasty burgers right here in the studio. So good times could be had by all. Speaking of which, are you a fantasy football guy? It seems like our pro members want to have a pro member fantasy football league. So maybe we'll have to get some of our hosts and guests involved.
I am a fantasy football. I have a draft next week. So if anyone wants to chime in any advice to you, please share it with me.
We might have to have one going here. So yeah, we might have to get one. I do some personal ones, but I floated doing one in the past, but it seems like there's some interest on the pro member side. So maybe we'll get some of our network hosts listeners, some of our pro members, maybe some other listeners out there. We'll have a good time. Wonder what the prize will be. Who knows? All sorts of fun. But speaking of fun, you guys, Shawn, over there at FTSE have been up to a whole heck of a lot of fun on the crypto side. Certainly since the last time we checked in with you folks on this program. I think the last time we chatted with you folks was almost exactly a year ago. I guess August is your time. We had Kristen Mirzwa on. She's the head of your digital assets over there, and she kind of gave us an update on all things FTSE and crypto. But since then, you've had a lot going on. Of course, you launched some new products, of course, with our friends over there at the Cboe back in April, some FTSE Bitcoin index futures over there at the Cboe. And then, of course, what we talked about last month on the European market brief, some nano products over there with Eurex. So get our listeners up to speed. What's new? What's hot in the world of crypto derivatives over there at FTSE, sir?
Yeah, Mark, thanks. So maybe just for the benefit of your users, FTSE Russell, we're a large global index provider. We've been in digital assets for quite some time now. We started with single asset indices, and now we cover baskets, staking, multi-coin, basically everything, sectors, everything under the sun here. But we really got into derivatives back in 2023. As you mentioned, with Eurex. So back in 2023, we partnered with Eurex to launch the FTSE Bitcoin futures. And that's just your traditional Bitcoin future. The future is representative of one Bitcoin product. And, that product, like I said, was our first jump into the derivative space with an exchange partner. And then since then, since 2023, with those Bitcoin futures, Eurex has expanded to Bitcoin options, and then they launched Ethereum futures and Ethereum options as well. But as you said, we've been really busy in the last year here. So just in May, Eurex expanded their offering to launch, Mark, what are called nano futures on Bitcoin and Ethereum. So smaller than micro, we got nano now. And what these are is the nano Bitcoin future is 1/100th of a Bitcoin, and the nano Ethereum futures are 1/10 of an Ether. So as the prices, as I'm sure you're aware, and everyone on this show is aware, have been going up, the cost to trade these products has increasingly become more expensive. So what the exchanges have been doing, and in this case, what Eurex did was by launching these nano products, is you're allowed to get exposure to Bitcoin and Ethereum at a fraction of the price of what these are trading at. And again, that's important, as these assets continue to gain value. And again, as you mentioned, we also have a partnership with Cboe, the Chicago Board of Options Exchange. And in April, we launched Bitcoin futures with Cboe. These are unique in that they are 1/10 the value of the Bitcoin index. So as you can see here, the exchanges are going with the smaller, I like to call them bite-sized contracts, Mark, to really open the door to a broader array of participants to trade these products. So we've been very busy, continue to work very closely with Eurex and Cboe, and looking forward to continue to build out the product suite with them.
You mentioned the indexes that these products are settling to. So people might say, why do the exchanges need to have these indexes? But, it's an interesting challenge when you're talking about these various spot markets, various venues, all settling to different prices at different times. If you're out there creating a listed product on these, like a future and an option on the future, you need to have something to settle that to. So that's kind of where you folks over there at FTSE come in. For some of our listeners who may not be familiar with that process, walk them through a little bit some of the challenges of creating these indexes that have to aggregate a bunch of moving parts at once and then come up with one number that these futures can then settle to, Shawn.
Yeah, it's a great question, Mark. And, as I said, we've been in this space for quite some time, and, transparency and a very rigorous governance process is really the foundation of FTSE Russell. So we are leveraging, the same governance and framework, transparent methodology that we do with any of our other indices. But you are correct. Digital assets is very unique in that there are literally hundreds of exchanges out there pricing, these assets, and they all trade, at a little different prices. So what we do and how we create the index is, as of this past June, we had 8 participating exchanges. So there's 8 exchanges that we take prices from. And the obvious question, Mark, might be like, well, why those 8? Those 8 passed our rigorous vetting criteria that we go through with the exchanges. So we have 8 that are participating today. That list, Mark, can keep growing or it can get smaller. It all depends on how these exchanges perform throughout our vetting process that we look at quarterly when we look at vetting these exchanges. And what we do with these 8 exchanges is we have a partner. It's Digital Asset Research, or DAR. And what DAR is doing is they're taking all of the pricing, and they're basically validating the pricing. Like, just as we validate the exchanges, we validate all the pricing as well. And then, it's really about working with the exchange on what they're looking to do. Like, when are we snapping the time to settle the product, right? Because we do have to pick a time, even though the market trades 24/7, we have to pick a time that we want to settle the product. So, we work with the exchange on snapping at that specific time. In the case with Cboe, it's US dollar prices. With Eurex, they offer it in dollar and euro. So we also have an FX conversion we have to do. But really, why do exchanges use or want to use the index, Mark? And what it is they believe that, our criteria for vetting exchanges and asset prices produces the best representation of the true value of the index, in this case, the single asset, whether it be Bitcoin or Ethereum. And they also, they want that price to be representative of the market. And ultimately, that's why they choose to work with us as an index provider. The other thing I would say, Mark, and I should have mentioned this, sorry, is all these products, both on Eurex and Cboe, are cash settled, which I think is really important for viewers to understand, in that you're never taking physical delivery of the actual Bitcoin or Ether, right? It's a cash settlement product. So at the end of the period, whether it be monthly, quarterly, whatever contract you hold, you will, receive, it's cash settlement. You will not have the physical asset.
Now, I'm glad you brought that up, because I was going to get to that in a little bit. It did seem in the early wave of listed crypto derivatives here in the US, whether it was Backed, whether it was LedgerX, all the push was towards physically settled, physically delivered contract. They seemed to believe there was a lot of people out there who wanted to sell puts to get into the underlying and then sell covered calls against the underlying that they already had. It certainly made a lot of sense from a use case perspective. In more recent years, it does seem most of the industry has pivoted towards what you're talking about, the cash settled, for a variety of reasons. Simplicity, just ease of use, maybe a response to demand. I'm curious from your perspective. You're out there in the weeds actually creating these products. Physically settled, is that wave dead in crypto? Is all the demand on the cash settled side, or do you still see maybe a use case for a physically delivered product for exactly what I said earlier, selling puts and maybe selling calls against some spot that you already have?
Yeah, Mark, look, I think they complement each other, right? So I think there definitely is a need for the physical market, and there are institutions, individuals who want to hold the physical asset itself, right? I think that's not going to die. There's a need for that. That's going to continue to be around. There also is a case in which an investor wants to gain exposure to these assets and not have to have the storage or the wallet, or they don't want to have to deal with the custody part of it. They literally just want to take a view on the price of the asset. And what these products offer you is the ability to do that, and not have to worry with that, Mark, right? Not have to worry about the physical asset part of it. So it's one less thing that these investors have to worry about, but yet they're still getting exposure to the underlying asset, and it's just settling in cash. So they're both necessary. Each individual will have their own unique view on if they think cash settled is better or physical is better. But I guess what you can see is just how we ran through the products that are offered on our index at Eurex and Cboe is they range from a 1 token or 10 ETH, right, to the nano bits, which is 1/100th, right? So you really have room to play with from the size, and I think that ultimately is reflective on the growing interest, and there not being one specific size or one specific way of doing it that fits everybody. So very long-winded answer to, they're both important, Mark. I think we need them both. I don't see either one going away. They're both vital to the.
That said, I'm hard-pressed to think of the last time someone came on this show to promote a physically settled or delivered contract. It's been a while. So it does seem like the momentum, for whatever reason, has swung in one direction. Whether it stays there or it's a pendulum, it just swings back, I don't know. But it started off really hot and heavy in all things physical. Now it's kind of swung the other way. What do you think, listeners? Is there room for both? Do you like the notion of having the proverbial truckload of Bitcoin dumped on your lawn at 2 a.m., like cash settled? It might be a fun question of the week to have for our audience out there. Listeners, take note. But Shawn, you're obviously engaging with the institutional side on a regular basis. I've made the joke on this program many times. Really, it's only a half of a joke, because we've always, since the onset of this show way back in, 2017, 2018, we've been trying to come to grips with this question of really, what the heck is the institutional demand for crypto? And I've often joked that it really just correlates to the price of Bitcoin. When Bitcoin's up, hitting new all-time highs, institutions are interested. When it's in the depths of crypto winter, maybe not so much. What do you think of that in terms of my own personal metric? Is that a little bit too reductive, or do you see people tend to answer the phone a little bit more readily when, hey, Bitcoin just hit a new all-time high yesterday?
So I joke as well, Mark, to where you always know who's holding Bitcoin when it's high, because everyone's talking about it, right? When it's low, no one wants to be talking about it. But look, I truly do believe, and even the conversations, I've seen them change over the course of the last 5 years here, to where it is becoming much more mainstream. What I mean by that is more and more traditional institutions are either already involved or are looking to get involved. And I think as index providers like ourselves, have been investing and building in this space and putting, I like to call them the guardrails in place, right, around our vetting criteria, that institutions can get behind this, right? That they know that there's some rigorous vetting that's happening on these prices, on the exchange, the underlying exchanges these are traded on, and there's a true value and that they can benchmark to, which is our index. So to answer your question, I do think the institutional demand is only going to continue to grow. You have seen, and bringing the conversation back to derivatives, you've seen traditional crypto, I'll call it crypto native exchanges like Coinbase launching derivatives exchanges as well, right? They have a Coinbase derivatives exchange in which they're trading, futures and options on these assets as well. So that's not just for retail users, right? I mean, there's a need for these products in the institutional space, and it's only going to continue to grow, regardless of what the price does.
This show is any anecdotal evidence, you're right. The institutional and indeed retail interest has only continued to grow. Some of that on the backs of just some of these absolutely wild moves we've been seeing lately. Shawn, you mentioned the ETH contracts, the micro, the mini. I've been joking on our future show recently that, for me at least, and certainly from the lens of that show where we track all of the major futures products that trade on all the big exchanges, ETH is kind of the inescapable story of the year. It swung from the worst performing asset of the year back in March. It was off 50 odd percent. And it was just lighting up all of our lists of the biggest losers of the year, all the way to now it's topping our list of the biggest gainers of the year. So it's been a wild swing out there, driven on the backs of a variety of different things. What are your thoughts on this massive move in ETH? And, I joke about the price of Bitcoin, but it does seem like the ETH move is bringing some of the kids to the yard these days as well, Shawn.
Yeah, I think, Mark, I think you nailed it. Ethereum has really been on a tear lately. And depending on what you read, some people are saying that it might be a shift, from Bitcoin to Ethereum. It could be, a rising tide, all boats rise together, right? Which Bitcoin and Ethereum have both been gaining. I do think that, again, as interest grows, you'll continue to see individuals diversify outside of just Bitcoin. I think there's some of that going on. I also think you talked about it, price. Ethereum is trading at a fraction of what Bitcoin's trading at, and I think sometimes just the price barrier to entry component is part of it as well. So I do think it's a little bit of everything. It's good to see Ethereum kind of get its day in the sun a little bit here. Starting to talk about it again. But again, I am not one to put predictions on prices, but I do think that we're going to continue to see this trend in Ethereum, in the future here.
You're right. Talking about the expansion outside of the big dog, which is Bitcoin, Ethereum, obviously making up for some lost time out there. A lot of people maybe had washed their hands of it earlier this year and now starting to come back into the fold. We're hearing stories about big funds buying into ETH. We're seeing, the ETH treasury story, not just the Bitcoin treasury story going on out there, driving a lot of flow out there. Also, as a result, interest in some other assets that have kind of percolated into the top 10 these days. Solana, XRP, I know CME both lists futures on both of those now, which is kind of wild. Are you seeing more interest and more demand in those other products outside of the top two these days, Shawn?
Yeah, we are, Mark. So as I said, at Eurex, our index is used for Bitcoin and Ethereum futures and options, and then at Cboe, we have our index on the Bitcoin futures. However, we are having conversations with both exchanges about what does the next wave look like. I think Bitcoin and Ethereum was pretty easy. Those are the top two single token, single asset that made the most sense. But I think CME has done a really good job in which they've kind of expanded on offering the single asset tokens. But I really think the next wave, Mark, might be an index. Maybe it's a top 5, top 10, top 20. I think a derivative on that would be really interesting. You and I have talked about this on a previous show, but I think staking is very interesting as well. So, I'd like to think that one of the exchanges will be looking at, and we've been having conversations with them, to be honest with you, with some of the exchanges on, what a staking derivative might look like, in which, you can trade both, you can strip out and trade the price version or the staking version for almost a total return type of, Ethereum product, right? So look, I think the Bitcoin, Ethereum are the easy ones to do right off the bat when you're looking to get into the space. I think we're only going to continue to see the expansion into those other single assets, like you said. I think that's naturally going to happen. But I really am excited for some of the innovative things that can happen around staking, an index product. We haven't even scratched the surface on sectors yet, right? You can do sector futures in the space. So a lot can happen, in regards to how this space evolves, and I think that's the exciting part.
I like that. Staking certainly perks my ears up. I see some folks in our live chat are intrigued by that as well, the notion of staking. I think you're right. You and I have chatted about this before on other shows, but there's so much going on there. A lot of new ETH ETFs coming to the party, not really offering the staking side, which if you're missing that, you're missing a big part of the ETH total return picture. So the notion of a contract that offers one or both is certainly fascinating. Plus, you and I have talked about as well, it does seem like there's some room for disruption on the staking side. If you go look at what some of these other venues like Coinbase charge you to stake your ETH, it does seem like there's some room for disruption over there as well. But definitely seems like there are some intriguing things. And you kind of read my mind, Shawn. My next question was, what are some of the hot things we could look forward to? It sounds like you just laid down some really hot things. In your view then, Shawn, What do you think in terms of time frame? When do you think maybe we'll be seeing some of these potentially staking products? Or as you mentioned, something like a top 5, a basket type product seems like it's pretty intuitive for a lot of people as well. When do you foresee some of these products hitting the market, sir?
Well, Mark, if I had a crystal ball, I probably wouldn't be sitting here with you today. But I can tell you the conversations we're having, that these products are sooner rather than later, right? So we're speaking with multiple exchanges on what these products look like. We actually have, like I said, we have indices on sectors today with our partner Grayscale. We have staking indices today as well. So from our side, we have the plumbing in place. It's really just around, working with the exchanges to construct what a derivative on our index would look like. I think staking, and you've heard me say this before, I think staking is really interesting because you can look to build out like a yield curve, right? In regards to trading. And I think that's really interesting to trade, like different points, like you would on a yield curve, right? So I think staking is really interesting to me. And I think staking and baskets are probably the next wave of derivatives we'll see, which, sectors not too far behind, and, interesting things of like, a Bitcoin gold derivative, right? To where your exposure is hedged. So it's like 50% exposure to Bitcoin, 50% exposure to gold. Those things, they're always interesting conversations. I think those might be a little further away. I think the initial interest will be on, as I said, staking and an index derivative would be my guess that would be launched next. Of course, the single assets I think are going to continue to expand as well. I think that's just natural as they continue to gain more backing.
I like it. I like the notion of trading the crypto yield curve. I think that could certainly resonate with a lot of, I'm going to go 2-year ETH, I'm going to go 5 years. So you can go all the way out the curve. That could be all sorts of fun things where you could do. Well, Shawn, I appreciate you taking some time out of your day to join us on the Crypto Hot Seat. We have to keep rolling with the program. But before we go, if our listeners are intrigued, and I'm looking at some of their chats, they definitely seem like they're intrigued and they want to learn more about all these contracts and indices we're talking about over there at FTSE Russell. Where should they go? What should they do, sir?
Mark, thanks for having me. Always a pleasure to speak with you. Love the show. For those interested, please go to www.lseg/FTSE Russell. That's lseg/FTSERussell.com. You can go to our digital asset landing page and you'll see everything you and I talked about, plus so much more. There's a lot of research, white papers, enough to keep your weekend full of reading. So please head to lseg/FTSERussell.com for more info. And again, Mark, thanks for having me. Always a pleasure.
Well, happy to have you on, Shawn. I'm sure we'll have to have you back on down the road where we could talk about, who knows, maybe some of these staking products, maybe some of these basket, maybe a crypto yield curve in the near future, sir.
Looking forward to it, Mark.
All right, listeners, now we have to keep on rolling. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. We're talking about the big dog, of course, which is Bitcoin. By the way, how about all that stuff we just talked about with the FTSE folks? A lot of cool stuff in the offing behind the scenes on the crypto derivatives front. Would you trade a crypto yield curve effectively? Would you be intrigued, I should say, by staking contracts? I think that would intrigue a lot of people, separating that out either as its own contract or as a total return type a lot of things you could do that are interesting, and certainly seems like a lot of things in the offing. So if you're tired of just spot and you want to do a little something different, got some intriguing things to keep an eye on. What are we keeping an eye on in Bitcoin this week? Well, a little bit of red on the screen as we kicked off the show. We're at about 112,475. That puts us down almost exactly 4,000 handles from where we were this time last week. We were at 116,440. So actually we're down 3,965 handles to be precise. Looks like we flirted on the big rally at the end of last week when everything rallied. Apparently because the Fed is going to cut rates, even though they didn't really say they're going to cut rates. But that's a conversation for another day. Everything rallied, including Bitcoin. We got up to north of 117 before coming back down to earth a little bit right now. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. And that weekly vol coming in this week a little bit frothier. We're at almost a 37, 36.85, puts it up about 5.1 points from where it was this time last week, 31 3/4. So starting to get a little bit frothier out there. That's good to see. Heading into and coming out of the dog days of summer, starting to head into, September, starting to head into the, the final tail portion of the year. Usually we see September, October, obviously. Maybe things get a little bit spicier out there. So maybe this 30-day vol will tick up. It was a 34 last week, ticking all the way up to a 35 this week. So still fairly anemic from an overall Bitcoin vol perspective. Obviously, we've seen it get much higher. So hanging out kind of, summer lazy time. We'll see if that can get a little bit of spice to it. The 6-month vol not getting spicier. 43 on our show last week, 42 1/4 right now. So the hodlers taking some of their vol down just ever so slightly, listeners. Out to the skew. Let's see what we're finding out there this week. And, after a nice little run out there, we're seeing that skew mostly turn to the dark side. It was slightly bearish on the show last week, getting a little bit more so this week. On the last show, the 7-day skew was almost a -2, -1 3/4, all the way down to a -5 today. Again, the weekly skew is highly volatile. That's going to change intraday depending on where we are. Now that we are retreating off the highs, it's going to show a pronounced bearish trend. But if we go out to the 30-day skew, that's a little bit more of a, shall we say, level-headed metric. And that also showing a little bit more bearish sentiment. Again, not entirely surprising. It was almost a negative, about a little over -2.5 last week, -2.6. Coming into the start of the show today, -3.5. So pretty much taking another point to the downside. And interestingly enough, the 6-month skew, so the 180-day, the hodler skew, for lack of a better term, listeners, where the hodlers hang out, 6 months and beyond. You talk for a long time about that premium kind of eroding since time immemorial, since Bitcoin was born and since the derivatives were created on it. There has been a premium to the long-term upside. Hodlers want to hodl. They want to hold on to it. They don't want to sell it. And so these days, that's been more of an open question. And right now, that is actually gone. On our last show, it was pretty modest. It was positive 0.4. That has swung to negative 0.4 right now. So kind of interesting out there that we actually have a bit of a discount to the upside right now. So at least for right now, the hodlers not pricing in a heck of a lot of juice to the upside. Bear that in mind if you like a lot of, let's say, covered calls and types of trades that are selling the upside out there in good old Bitcoin, not getting as much juice for it as you once were. But are we getting a lot of juice out there in IBIT? Probably the vehicle a lot of you are slinging your Bitcoin derivatives in these days. Well, IBIT giving up the ghost a little bit as well. Was at a 64 even when we kicked off the show. That puts us down 2 points. As we're about halfway through the show now, we're down to about a 63.5. So giving up another point, down 2.5 points on the week. The ADV continuing to edge up, 574. It's up another 20,000 from this time last week, and almost hitting that already. 563,000 contracts on the tape. So a hot day out there in IBIT. By the way, if you're wondering, how does the vol shape up? 30-day vol in IBIT versus good old BTC on Deribit. Well, we're at a 35 on Deribit, and guess what? 35 even on IBIT, down a point. So again, shows you how well those two are syncing up these days. And what's the hot trade out there in IBIT options today? It's 23,000 of the 67 calls expiring this week. So 67, we're at 63.5 right now, 3.5 points by the end of the week. Seems like a bit of a big move, but then again, Bitcoin can do that with his eyes closed. By the way, only trading for an average price of about 13 cents. Obviously not a huge flyer out there. And number two, 22,000 of the September end of month. That's interesting. So that's kind of lining up with kind of the quarter end expiration we see on a lot of platforms like Deribit. If you've listened to this show in the past, you know, when we used to break down a lot of the OI on Deribit, a lot of it went away at the end of every quarter. Quarterly expirations are just the way a lot of crypto derivatives traders like to play. And so these SEP 65s expiring at the end of September, end of quarter type contracts, that certainly does line up as well. 22, almost 23,000 of those going up for an average price of $2.17. So 65s, again, about $1.50 out of the money. $2.15. You like those? You buyers or more sellers on those bad boys, listeners? Interesting stuff out there. Number 3, we got about 23,000 of the SEP 70s. So it looks like it could be a bit of a vertical, or perhaps because we're opening on the 65s and maybe closing on the 70s, might be a bit of a roll down as well. Somebody had the 70s, they're dumping them right now for about 60 cents, taking what they can get for them and reopening. Same amount of size, actually, on the 65. So interesting stuff out there, maybe taking advantage of the opportunity to get a bit of a better price on their contracts out here. I don't see it going up as a spread, but that doesn't necessarily mean much, listeners. So interesting stuff out here in IBIT. Speaking of interesting stuff, I saw our chat talking about this earlier, and we are probably to blame for this. We talked about it on Options Oddities. Bill and I have talked about it here on this show as well. What are we talking about? We're talking about our old pal Mara. And it has been a spicy one of late. I will admit I have been trading this one pretty actively as well. Going into their earnings close to a month ago now, they were giving some decent premiums to the downside, so I sold some puts. I know Bill sold some puts as well, and it's been a good trade as well ever since then. Got some underlying put to me. I've been wheeling or attempting to wheel out fairly aggressively, wheeled out pretty aggressively last week, got called away, and now taking advantage of this sell-off. Mara right now at about 15.5. So that puts it off nearly $1 today, about 85 cents. Taking advantage of the opportunity to wheel back in again. I'll talk about some of the puts and some of the levels I'm doing on our oddities, some of our pro members to play along with as well. But it has been a great wheel candidate. So if you're back in the business of wheeling, then Mara has been an interesting one. Certainly this past week, if you wheeled out at the 16 strike, it's been a very timely, fortuitous do for all you folks out there. So a good trade out there. Mara continues to light up the tape. 188,000 contracts today. Kind of light because the ADV is 350. So needs to get going today. The hot option in Mara today are the 16s expiring this week. Kind of interesting. 10,000 of those bad boys going up. Average price of about 25 cents. Would you be buying those calls, listeners? Or would you be perhaps selling those against maybe some Mara you've already got to get a little bit of extra yield? By the way, about 10,000 as well of the 15 halves trading today, also expiring at the end of the week. Those trading for around 43 cents. So those are opening. So maybe you like those a little bit better, a little bit closer to the fire. Speaking of the fire, let's get into it now, listeners. What's raging out there in the altcoin universe?
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the Altcoin Universe.
All right, listeners, let's get down to business as we explore the altcoin universe, especially right now as we check out what's lighting up and what's battling for dominance in the top 10 from a market cap perspective. Last week, it cost you about $32.75 billion to break into the top 10. That got you to our old pal Cardano. Let's see how we're hanging out this week. A little bit lighter, listeners. $31.1 billion to break into the top 10. That still gets you to our old pal Cardano, so not much of a change up there, but there is a change up at number 9. Our old pal Doge falling to the number 9 spot. Doge had $33.5 billion worth of market cap last week. This week, $32.9 billion. It's coming back to earth a little bit. That means our old pal Tron, seemingly locked at number 9 for a while, stealing a march on everybody else. Tron had $33 billion exactly worth of market cap last week. This week, $33.25. So climbing all the way to the number 8 spot, kicking Doge to the curb, saying, get out of here, kid. Number 7, USD coin, $67.5 billion. Number 6, it's Solana, showing some signs of life out there, $106.5 billion worth of market cap versus about $99 billion this time a week ago, listeners. Number 5, BNB, $120.6 billion. Number 4, it's Tether, $167. And then number 3, keeping Bill's wife happy, $176 billion worth of XRP. Number 2, it's ETH, over $500 billion. How nice does that look to a lot of ETH heads? 52.8 to be precise. So $552.8 billion worth of market cap. And the big dog BTC coming in a little bit, $2.23 trillion, as opposed to last week when it was a little bit north of 2.3, about $2.31 trillion worth of market cap. Let's get out to maybe it was your old favorite, maybe you renounced it and now you're ashamed of yourself and you've gotten back in. Maybe you never left the party. Maybe you're like our buddy Dr. Vix and you infamously washed your hands of ETH years ago when it was 2,500 and never looked back. If you did that, you're probably regretting that now because ETH having a nice run out there again, listeners. Threatening 5,000 earlier this week. Got up to about almost 49 and a half, about 49.35 or so on Sunday. So quite the run. Of course, a lot of that on the heels of this just crazy rally on Friday, where seemingly all assets just soared to the stratosphere, including ETH, gapping up from about 4,200 in the morning all the way up to nearly 4,900, 4,877. So I think they knew it was my birthday, so they wanted to rally some assets. Either way, just a massive intraday. I can't remember the last time we saw ETH move. 600 plus handles intraday. It's been a little while, listeners. So ETH just on the rampage out there. So all you ETH bulls having a good time, even if we have settled off a little bit from those highs. Still up on the week. We were 43.48 on the show last week, 45.85 coming into the show today. So up almost 250 handles, about 237. Again, ETH bulls will certainly take that after spending years suffering, getting beaten up. How long did you have to sit there and suffer through a 1,000 handle on the front of your ETH, right? So you're making up for some lost time finally out there, ETH fans. Vol-wise, continuing to get spicier, which is a good thing. 68 and a third on the weekly vol last week, 73.2 this week. On the monthly vol, again, 68 and a third there as well. Last show, 71 and a half, hanging out over a 70. And you could argue maybe that's even undervalued given the fact that it can do 600 handle intraday moves at the drop of a hat out there. So wild stuff out there. Tell you what, listeners, let's have a little fun. Let's go back and look and see how wild the skew got back on Friday. Listen, the weekly skew, because that's where we'd see the biggest swing. And we did see a big swing. Earlier in that morning, it was about -5.5 on the weekly skew. Once that rally started kicking in and the bulls got the bit in their teeth, it swung all the way in the other direction, all the way up to about a +5, just in the span of a couple of hours into the early morning hours of Saturday. So, and then it was still 5 bid, +5 points, all the way through Sunday. So it remained bid for most of the weekend before coming back to earth now a little bit. But wow, interesting stuff out there on the, I'm kind of giving up the ghost a little bit on the skew front, but interesting stuff out there. 30-day vol, like I said, 71 and a half, and 6-month vol, 67 and a quarter last show, 67 and a half this week. So not doing a ton out there on the hodler front. Going out to the skew, like I said, kind of just gave away the lead there, but interesting stuff. Huge moves in the skew. Now that we're coming back to earth a little bit, still up on the week. Again, I said before, I'll say it again, this weekly skew is wild. It'll move all over the place. It swung back to a -2. That's solely because we've just retreated off the highs. That's all. Whether or not you want to say the sentiment is bearish, I wouldn't read into that too much. Once you retreat off the highs, you're going to see the weekly skew swing in that direction. It was -2.1 on the show last week. What did that tell you, right? We rallied hard intra-week there, so the weekly skew is going to evolve. It was -5 going into that big rally last week, so on Friday. So again, the weekly skew can change at the drop of a hat. Monthly skew, -2.1 on the show last week, back to a -2 right now, so it hasn't really changed much. You'd never know we had a big, massive rally intra-show there, listeners. And the 6-month skew, +2 3/4 on the show last week, coming back to earth this week as well, back down to about a +2 only. So interesting stuff out there on the ETH skew front. Let's run through a few other hot names a lot of you folks have been watching. Then we'll get out of here for this week. Got to start setting up for Thor, listeners, the hot options report. Let's get out to good old Bitminer, aka B-Miner, whatever you want to call it, ticker symbol BMNR. It was at a 51 even when we kicked off the show, down about 5.5 points. It is down even more now, down to about a 50. So that's down 6.5 points. Lost another point during the show as we've been chatting here, listeners. The ADV continues to grow, 189,000 contracts a day, up 27,000 from this time last week. and putting up about that much already today. So hitting its ADV pretty much right now. If you're wondering what is the hot contract out there in good old B-Meaner, it's a 17,000 of the 55 calls, the doubles expiring this week, going up for an average price of $2.32, which, by the way, the vol out here, we're talking about, Bitcoin at a 35, ETH at a 70, good old BMNR at 128, so up 5 points, which is why the call that's out of the money expiring this week is trading for an average price of $2.32. Yeah, that's kind of juicy. So I guess if you have some BMNR, maybe you want to take a chance to overwrite, you're getting some juice for it. The 60s trading 15,000 times today as well. Average price of $1.12 for those. So you can sell the 60s right now. $10 out of the money call. Maybe not right now, but earlier in the show you could have. For $1.12. Probably can still sell them about $1, listeners. So if you're looking for a little bit of yield, that might take some of the sting if you're holding the underlying as it continues to erode. Looks like that might have been a roll. So it might have been closing on the 60s, opening on the 55s. Let's go out to Circle, another name that was a hot one. We talked about it on the show. I'll never forget when I mentioned it to our buddy Mr. Bill on the show that day. He literally fell out of his chair when he saw the put premiums that were available for him to sell. He could tell the old market makers when they get the bit in their teeth, they get excited about selling some juice. And you could see that one there. That was, I will admit, I sold some of those puts as well. That was a good do, as the kids say. Kind of backed off since because it seemed like it had some downside in the offing, and that is indeed the case. When we kicked off the show, Circle was down to a 127, down 15.25 points from where it was this time on the last show. As we've been talking here, it has also sold off as well, down to about a 125. So giving up another $2, down 17.25 points. So Circle, I think we were just talking last week about the potential for the 135 puts. Maybe that was a little over a week ago. If you sold those, you certainly got some stock you're the owner of right now. So again, this has been an interesting one to watch. Where is the bottom? This one just went public, I believe, what was it, $30? Not that long ago. So again, interesting stuff out there. The put wing has definitely come crashing back to earth as well from a vol perspective. So nowhere near the tasty premium harvesting opportunity that it was, let's say, a few weeks or a month ago out there, where they were paying astronomical sums for the puts. These days, they're still paying for them, but nowhere near what they were. So again, another reason I always say, make sure the juice is worth the squeeze. And right now in Circle, it hasn't been feeling like it's been worth the squeeze to me. That said, 131,000 contracts on the tape today. The ADV 166, down 35,000. So I'm guessing a lot of other people have that same feeling. The juice not worth the squeeze. I know a lot of that trading in the past was premium harvesting. So if the vol's coming back to earth, and the skew certainly is, then it's going to impact the volume, and that is pretty much what we're seeing. That said, as the sell-off has continued, we are starting to see a little bit of vol creep back in, so maybe that will help the 30-day vol up to a 77, up 10 points. So perhaps there are some opportunities out there. Maybe I need to reinvestigate out there. But again, you have to be comfortable if you're selling downside in Circle. You have to be comfortable owning the stock. That is the first and foremost due diligence you need to do. So make sure you are comfortable with whatever level you are selling out there. Listen, let's keep rolling out to Solana. I said Solana making up for a little bit of lost time out there. 183.75 on the show last week. 197.38 to kick off the show today, up about 13 2/3 over the week. So a nice little run for Solana. Again, I know a lot of our ETH fans, also fans of Solana. I know a lot of our pro members averaged down and re-nibbled back when Solana was, 150, 125, maybe even around 100 recently. So if you did that, looking pretty good out there as well. XRP, last show, 306, coming in 297, so giving up about almost a dime. Maybe Bill's wife won't be too happy about that. And Doge, as we already mentioned, giving up a little bit of the ghost. 22.3 cents last week, 21.8. So coming in a little bit, but enough to fall to the number 9 spot in our market cap top 10. Litecoin, 117.91 last week. Taking a bit of a drubbing this week, 111.68, so off about 6.25 points. Cardano, 91.8 cents last week, 87.2 cents this week, so down a little over 4 cents on the week. Polkadot, 392 last week, 385 this week, down about 7 cents. And everybody's favorite, Shiba Inu. Everyone's waiting for this magical Shiba Lambo to materialize. Doesn't seem like it's materializing this week. 1,000,000 zeros, 1267 last week. This week, 1,000,000 zeros, 1, 2, 3, 4. And you know what? Before we get out of here, let's do a real quick crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. And you know what? We kind of just posted this mid-show, kind of as a response to our conversation with Shawn over there at FTSE. Want to get your sense of this as well. This is going to be our crypto question of the week, which is quite simply, are these physically settled contracts, are they dead? Do you see any need for a physically settled crypto derivatives contract, or do you only want cash settled? So gave you two choices: cash settled contracts only, or the physically delivered contract still serves a purpose, is still needed. Again, just went live a few minutes ago, but right now 100% of you are voting that physical delivery is still needed. So there you go. Old school, not dead with you folks out there. But again, just went live a few minutes ago. I'm sure this is going to evolve in a little bit. Are you cash settled all the time? You see a need? Would you like to sell a put and get some underlying actually put to you? Would you like to sell a call against your underlying and have that called away? Or is that just too much hassle? You don't want to deal with that noise. Get on over there to @options right now, listeners, and make your voice heard. As I speak, more votes coming in. Now we're closer to 50-50. So that's kind of what I thought. I fully expect cash settled to take it. But if you want to fight the good fight for physically settled, now is your chance, listeners. All right, and that music means we're done with the crypto rundown for this week. Not done on the network, though, not by a long shot. We'll be back in a little bit to break down all of the action that is lighting up the options markets today. Yup, it's time for Thor, the hot options report. Check it out. Another reason why you should be listening to the full network out there. I want to thank our guest, Mr. Shawn from FTSE Russell. If you want to check out what they have cooking, of course, FTSERussell.com, or LSEG stands for London Stock Exchange Group, FTSERussell.com as well. Both of them will get you to the dark side. Click on their crypto derivatives contracts to learn more about all the stuff they have cooking over there. Again, back again in a little bit for the hot options report, then back again with our usual array of content throughout the rest of the week until we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.